Welcome back to the Eric Crown Crypto channel, wishing you a happy and healthy start to the site's Wednesday. But this video is actually being recorded the day prior, and we're going to be focusing on Ethereum because I am actually going to be on a plane by the time this probably releases. Anyways, with that said, Ethereum has been heavily requested because it did perform a little bit better at the start of September. But as you likely know, there was a nice event, and the good old saying is, buy the rumor, sell the news. And was this time different? Maybe not. All right, sweet. So let's just jump into it right now for Ethereum and a few things of interest. This video is actually be very, very short and sweet in this case. And first and foremost, on the weekly, again, only addressing higher term timeframes, we do observe 3 drives of hidden bearish divergence over here. Yes, they are phantom drives, but they do matter nonetheless, as we do have 2 rejective highs right here, lower highs indeed. And of course, that is going to be accompanied with the jewel signal to the downside on the weekly right here. That in alignment with the weekly stochastic also freshly turning down and rejecting the bullish control zone over here is going to be headed down and showing downside momentum as long as Bitcoin, no, that's Ethereum, is below 1620 in this case. So all higher term timeframes kind of in concert with each other. If we do go over to the monthly as well, I think that this is, rather compelling right here, we'll say. And then what I'd like to combine this analysis with is with something that has been more well tested over the dawn of time, and that is going to be Bitcoin over here. Now, traditionally speaking, when it comes to altcoins or just anything not named Bitcoin, the market essentially moves together, and Bitcoin basically moves in alignment with traditional markets. And the way that I look at it is that the altcoins relative to Bitcoin move in greater degrees of strength and relative weakness. So in this case, Ethereum, we do expect to have a greater percentage move in comparison to Bitcoin, just because on the upside it typically has greater percentage moves, and same thing on the downside as well, historically speaking. So here's the thing, for Bitcoin in September, it has usually not been the greatest month of all time. If we were to do a statistical analysis of all 13 prior Septembers in Bitcoin's history, we'd find that 69% of the September's closed to the downside, and like decently down, I should say, as well. 2 of the remaining 4 non-major down Septembers were basically just unchanged, so a range, and only 2 have actually ever closed green significantly in this case. So if we were to look at the average drawdown for the down months only, that would put us at about 21.17%. And if we were to look at this from a first standard deviation standpoint, which represents where we expect about 68% of the results to fall between, that would represent a range between about 13.5 all the way up to 29%. That is to say that if we do look for this move to essentially occur on Bitcoin in these next few weeks, which is, still a big if, obviously, then we'd expect Ethereum to have a greater percentage move than likely these averages over here. So going back into it, keeping these in mind, 21%, I really want to keep these 2 ones in mind right here. I won't go for like the super great one because it's just, it's too far away right now. There's obviously going to be bounces in between it as well. There's not going to be a straight line or anything like that, or at least I imagine very unlikely. Anyways, so yeah, 21% and about 13.5%. So let's go back on over here. Let's go to the monthly, and I'm going to throw on a major fib retracement from the prior cycle low to the current cycle high. And let's just see if any of these numbers match up from where September opened to where we might find a wick low. So keeping in mind that, again, the percentages should naturally be bigger. And I do suspect that Ethereum very likely does retest around its current lows. That would be about a 30 to 35% move just to test the 382, which is, basically the current lows at about 1,000. A little bit above there is probably fine as well. Going back into it over here, that would obviously be a little bit on the upper end of what we do look for. But again, when we're talking about altcoins, we do expect them to move in greater degrees. So if we were to even mark down to the next, I don't know if this can be like super useful over here, but if we were to mark down to the 0.5, which is $600, that would put Ethereum at about a 56% drop down starting in September from the open to potentially a wick low. I do think that looking for anything bigger than a move like that is probably unlikely in this case. But ultimately, we have a clean and clear rejection of of the 9 and 21 exponential moving averages right here. Very likely does come back down and at least test the current lows, which I do think is reasonable. If you see a break below the current lows, is it reasonable to expect the next move down somewhere between about 750 to 650, let's say? Yes, I do think so, but I want to see a higher term time frame closure below those regions before that becomes, a legitimized target. In this case, for right now, if we were to go back to over here to the weekly, again, what would I essentially confirm as a breakdown below the current lows? I need to see a daily closure either below the actual wick low as of right now, which is like $900 or just below $900, or a weekly closure below about 1,000. One of those two would do it for me. And then yes, I would be looking for the next major targeted region to likely get hit. Until then, are there going to be some more short-term bounces off the 200 simple right here? Definitely possible, certainly possible. But as far as I'm concerned, for Ethereum, I have no real reason to be looking at this one as anything resembling like a major, massive macro trap, as long as it's below the current major highs, which was actually set in August, let alone these highs that we did see in September as well. And those accompanied with stochastic momentum turning down, plus, again, this hidden bearish evidence over here, I do suspect that this one's a lot more likely to test around the current lows first before anything else. And then the question is how big could the bounce possibly be? And if we do see any sort of a failure below these lows, then I do look for the next major markdown somewhere between about 650 to 750. All right, sweet. That's going to do it for today. Nice and short and sweet. I hope that was in some way helpful. With that said, take care, much love, and see you hopefully soon.